correlation between land to asset ratio and capital growth. Not all investors make note of this fundamental in their investment decision. Some of the more experienced investors would have heard this term, but many don't quite understand how to use it. In this podcast, we discuss what a land to asset ratio is, how to demonstrate capital growth potential, and how not to use it. First of all, what is a land to asset ratio? If you have a look at this image in front of you, the land to asset ratio is a fundamental criteria that helps to assess the quality of an investment property with the emphasis of determining its capital growth potential. It is the proportion of the overall property value made up of the land component. You'll see it's the land value divided by the purchase price or the estimated value, which ultimately equals to the land to asset ratio. If you see this diagram here, this simplifies how it works. If a property was purchased for $850,000 and the land value was $595,000, the land to asset ratio would be 70%. How to determine the land to asset ratio? The assessment can present capital growth opportunities because rising land values are primarily the main driver for price growth. The building or dwelling is generally seen to be a depreciating asset in value. For this reason, it's ideal to have a higher component to land in your property purchase. To determine the ratio, you need to know the land value. An efficient way to do this is to understand the average land value per square metre in the particular suburb that you're looking to invest in. Then multiply the figure by the square metres of the particular property you're looking to physically purchase. Another alternative is to source a vacant block of land recently sold and divide the sales price by the total square metres of the land. Now that you know what the land value is, you can then determine the percentage of the estimated purchase price figure made up of the land component. What is a good land to asset ratio? If we look at this in the view of a property investment, a good ratio would be anything over 50%. However, of course, the higher the better. At Crest Property Investments, we aim to achieve a 70% ratio or more. We believe the higher the ratio, the higher the potential to achieve capital growth. But please note, the building or dwelling also has a value. A good quality build will improve the appeal of the block and complement the capital appreciation. It is for this reason that a 50% ratio can also provide the equivalent of a 70% ratio. Each property location and purchase amount must be determined on its own merits. It is very much a case-by-case scenario. One mistake many property investors encounter is the emotional side of making an informed decision. Some make a decision based on the opinion rather than on fact. The land to asset ratio can help alleviate or reduce this emotional attachment. There are a number of fundamentals that should drive your decision on what you should buy, and what the land asset ratio being one of the influential contributors. How not to use the land to asset ratio. A larger block of land doesn't necessarily mean it has a higher land to asset ratio. In fact, this is the ultimate way not to use this fundamental. The other question raised is, should we buy a vacant block of land with no home on it? We would generally say no. A vacant block of land does not earn a rental income and has no tax deductible expenses associated to it. If you'd like to learn more on how to determine and assess rental yields, feel free to explore some more information about these sorts of things on our market insights on our website. Our website is www.crestproperty.net.au. The loan repayments are also deemed non-tax deductible if you purchase only land. This is on the basis that land does not generate an income and therefore it is not eligible to any tax entitlements. Land is also rather scarce. If we look to source it in high demand areas, particularly in good proximity to the city of schools and amenities, don't be misled that bigger is better. A larger block of land doesn't always mean more capital appreciation. Location is still paramount, Buying a huge block with the hope of subdividing sounds nice in theory, but this isn't as easy as one thinks. The location of a property is still more important and influential to appreciate in value over the size. Buying in the middle of nowhere may not offer any capital growth at all. What are the disadvantages with properties with high land to asset ratio? There can be a disadvantage of properties that have a high land to asset ratio. The rental yield is likely to be lower as it is difficult to rent a house on a large block, higher than a traditional house and land. Essentially, the dwelling generates the rental income, whereas the land helps generate the capital growth. This is where your property assessment should be done with balance. Capital growth and rental income can outperform each other at different intervals. The rental income is particularly helpful if you want to assist in paying the investment loan if applicable, while retirees may rely on the passive income to support their living expenses in retirement. Another point to consider is the tax entitlements. Property investors are very lucky to be in a position to claim a variety of tax deductions, particularly the high beneficial tax depreciation entitlement. The government allows investors to claim depreciation of a dwelling for up to 40 years because the dwelling is reducing in value over that period. The land component does not receive any form of this such entitlement. The question remains, what should I do? There are other contributing factors and common themes seen in what capital growth properties have in common. Include the land to asset ratio is part of that overall assessment, but it is not the only valuable commodity to consider. Before buying a property, we recommend seeking property advice first. At Crest Property Investments, we specialise in sourcing brand new and off-the-plan properties for buyers. We also do not charge fees to our buyers. If you'd like to learn more, please feel free to contact us. We welcome the opportunity to help you make the best property decision. Again, you can visit our website to learn more about our services at www.crestproperty.net.au. Thanks for listening.